Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Let's take a look again at the gold market. The situation on the gold market right now is relatively clear because if you will take a look at our weekly research, especially on the weekly chart, you will see, guys, that on the previous week we've got another bullish stop grabber pattern on the weekly chart. And since we have the clear pattern, we definitely know where is the invalidation point, where the target, and that's why this makes our analysis more simple than usual. Although situation on the gold market is still not very simple because this is really a bit tricky data on the market. Particularly speaking, from the one point of view, you see the bullish action, and many investors explain this action by some geopolitical tensions, the Russian military exercises, the Obama's order on applying the air forces on the north of Iraq, and so on. But from the other point of view, you do not see the support of this rally from real purchases. The demand on the physical market is still anemic. Also, if you take a look at the recent Safety C report that we also have placed in our weekly research, you'll see the significant drop in the open interest rate and contraction of the net long position. That's also, it's difficult to involve this Safety C data with the recent rally on the gold market. And that is really the warning sign. But still, as we have the patterns in place, we can't exclude that pattern by themselves could be some sort of the prophecy, some sort of the forecasting of the possible changes in the fundamental data. Recall what we once got on the previous week on euro currency. We've got the daily bearish grabber that suggests the taking out of the lows on the euro, and on the next day some supportive data for US dollar has been released, and this grabber has worked. Although the situation itself and in general the picture doesn't suggest the possible action in the opposite direction, this drastic action. The same could appear a bit later here, so that probably could be clear later, and we will see maybe that the grabbers somehow forecasted some changes in the fundamental data in the geopolitical situation or something of that sort. But anyway, if even we will not continue to think about it, we have the bullish patterns on the weekly chart and we can't just ignore them. And if you are bearish, for you it's better to wait when the market will erase these patterns before you will take any short position, because taking the position against the grabber could be really expensive, and this could be really risky issue. So, but for those who are bullish and who just would like to trade something, the grabbers is really the gold mine, since in fact the appearing of the gold of the grabbers eliminates all questions, because we can't enter short. We can't enter short, as we said. So we can either do nothing or enter long. Trade this, trying to ride on these grabbers, trying to trade them. So I think that you guys will be able to do nothing without my help. So let's discuss the possibility for taking the long position here. On Friday we said that as market has hit some significant resistance, that is the 618 fib resistance from that top to this bottom, 618 with 1320 area, and also here is the monthly pivot resistance 1, so market almost has tested it. So that's some area of resistance, so market hit it and turns to the downside. Here we could say that probably retracement had started. On the couple of weeks ago, we have announced some concerns on this rally, especially on the appearing of the bullish engulfing pattern here, because we have previously, or better to say, we had this ABCD pattern, ABC top D, that hasn't quite completed, and that ABCD, larger ABCD, ABC top D pattern, and both of them have not been completed properly. And this concern partially have been resolved because, take a look, by this action, market has taken out of this top and has erased this ABCD pattern. So this pattern is not valid anymore. So if market will return right back up and taken out of these highs, it simultaneously will erase this ABCD pattern. And the second concern also will be resolved. And if grabbers will work, this definitely should happen. That will be also the moment that we should keep an eye on the coming week. So as soon as this will happen, that will give us significant relief and probably will mean that market has no barriers more to continue move to the upside and completes the target. Now, the second advantage of the appearing of the grabbers is our working swings, because the grabbers significantly narrows the working area. So we do not need this action, that action. All that we need is just this recent swing up. Because if market will return right back down and take out of these lows, it will erase the grabbers as well. And that will mean that our context has failed. That's why all we need is just this swing. So if we will take position on some retracement and will hold, market should start move to the upside according to the grabbers. If market will fail taking out of these lows, it will raise the constants. That's simple. That's why I said that the situation on the gold market is relatively simple if you would like to rely on the grabbers that we have on the weekly chart. By taking a look at the 4-hour time frame chart, we see this thrust up. Two levels to watch for. First level is 1306 and second 1296 area fib support. First support is really significant, and we could say that it has been tested once already. Okay, because that will be the weekly pivot point, and that also disrespected previously broken confluence resistance. So 1305, 1306 area was the confluence resistance on the daily chart. This market has passed without no respect. Now it has returned right back down, retested it, and theoretically market could continue move to the upside right from this area. That's also possible, but I can't exclude that some deeper retracement could follow. In this case, the 1296 area is the second level to watch for. On the 13-minute chart, today we will take a look at the 13-minute chart, not hourly chart, because it's just clearer picture. At the first glance, guys, we could suggest here existence of the head and shoulders. Well, maybe they will be, that's really will happen, and they will be the head and shoulders. But guys, here, if you will measure the extension of this potential shoulder, then top will be above the 1618 extension. That's not very good for the head and shoulders pattern, and it's too flat and wide to treat it as the shoulder. If you will contract your surge and we'll take a look at this pattern, okay, that also not very nicely shaped. It's just 1618 of this swing also stands right here, and this splash, this engulfing bearish engulfing, stands above it. Also here you see deep action to the downside. 1305 has been retested, as we said, move up. So initially, guys, it's better, at my taste, it's better to rely and watch for the butterfly. And the targets of the butterfly approximately stands around the fib levels on the daily chart. So 127 stands at 1304, approximately 1618 stands at 13 even, slightly higher than 1296. So let's keep an eye first on this butterfly, and later we will see. Maybe market will form something more clear. Maybe this will be some ABCD pattern or something of that sort that will create an agreement with some daily fib support or 4-hour fib support. We will see. But first we need to wait for retracement and this will be perfect market for forming reversal patterns, for example, as this butterfly, to point for us the possible reversal pattern to the upside and the possible area where we should start to think about taking the long position. Well, second stage of our plan is particularly the entry in on the long side of the market, and then also we should keep an eye on this top. So it will be perfect if market will move above the monthly pivot resistance one and taking out of this top. In this case, this will be significantly bullish moment, and it would be nice if it will happen on the coming week.